Okay, thank you guys. Sorry for the mishap and apologies, technical difficulties, as they say. But we're back live. Is this a different link? Do we need
Yes,
to?
this is a different link. So if you know of any friends who are struggling, please send them the new link.
And also just find us on YouTube. So look for Endowus and then you can subscribe to it. Also, if you just look for Endowus, the first one that you'll see is this live link. And so anyone can join this YouTube live presentation. So please go to that one and connect with us.
Yeah,
so
sure.
We'll start again.
Yep.
Apologies.
Yep. So maybe I was going through the Silly platform. So the link is down below, right?
Can we show them that slide again, maybe for a couple of minutes for people?
Yeah, sure.
Yeah.
So use your QR scanner or the link below.
Yeah.
The link below, right? You can get to the Silly platform.
So the left side is the sign-up offer that we have. On the right side is the Q&A for Seedly. So you can go to Seedly and Shengshi will show us exactly how to ask questions. And we'll have time at the end. Some of the best questions and most interesting ones we'll pick and we'll present on those questions.
Okay, sure. So on the Seedly platform, you'll be able to, this is the page that you'll be linked to. So you can ask a question, right? So when you ask a question, you can choose to ask it anonymously or ask it with your account. We'll answer it at the end of the presentation, right? And if you were to go into the unanswered question section, we'll be able to follow the questions that you find interesting so that we know which questions that our audience will be interested in. Yep. So,
sounds good.
And also another thing is that you can see the reviews of us. So I'm sure there's different ways you may choose to invest with us, be it for CPF, SRS. There are some. Silly is very helpful platform where you can sort the reviews by user experience, customer support, low fees. So it does pick up the keywords. You can sort by the most helpful reviews, most recent reviews. So play around with the platform and do take a look and see how we perform against our competitors.
And please do leave a review if you are an existing customer because it really helps us. And it also is a great forum for us to receive feedback so that we can improve our products both on the technology side and also on the investment side. So thank you guys for that.
Okay. So shall we go to the presentation?
Yeah, sure. Sounds good. So we had this really fun banter, but most of you guys are going to have to miss it because of our technical glitch.
Yeah.
We'll continue our chat later, Shengshi, and next time we'll do some more fun stuff.
Yep, sure. See you later.
All right. Thanks. All right. So guys, thank you so much. We did our introduction. Shengshi, by the way, just to repeat, is our personal finance lead. He has a wealth of experience. He's written for Straits Times. He's also, worked in private equity and real estate. For large companies out there that, so he's very interested in personal finance. He's our personal finance lead. He writes for us. He also engages the community. If you're a blogger out there and you're looking at this and you want to reach out to us for partnerships in terms of content or in terms of like working together for affiliate programs, then Shengxi's the guy. Just to introduce myself again, for those who are joining late or have, couldn't find our link. Apologies once again for the technological glitch. We are live now, and I'm Sam Ree. I'm the Chief Investment Officer of Endowus. And we had a really good webinar last week. It was much more somber in mood, obviously because of where the markets were and a lot of uncertainty. But not just financial. There's a lot of, physical health issues that we are grappling with. It's much more than just about financial markets and trying to predict whether it's going to be up or down. Major dislocations in economies and businesses, in the livelihood of individuals and people around us. And so I think this was really somber. This week, obviously, there's more difficulties in your personal life as Singapore clamps down a little bit on activities, both social and for travel as well. So I think it's a difficult period, but it's sometimes important to go back to the basics. And so today's presentation is really about trying to reintroduce Endowus to the community for anybody who's interested or who just heard of us or who saw our ads on the MRT or the video on Bukit, Bugis Junction. So this is an introduction. Before we got cut off because of the technical glitch, Shengxi and I were talking about what are we doing, spending more time at home. For example, I was at home all day and came into the office, but Shengxi was at home. And he said that he's going back to his New Year's resolution, which was shocking for me. I don't even remember my New Year's resolution, but Shengxi was saying that, he's reviewing his New Year's resolution because he has more time and he's at home. And I think that's kind of the mentality that, this opportunity is giving us. It, I think, is a good time to reassess who we are, what we're about, and in terms of investing, what are our future needs as a family, as an individual. We should reassess our financial health and also our financial plans so that we can secure our financial future better. So today's presentation, as I said, is going back to basics. It's about Endowus. It's about why we invest. And so we'll just kick right into it. So Shengxi came up with this question: why shouldn't investing be as easy as getting a taxi through an app? And many guys are trying to solve this problem because investing is really tough. When I was an institutional investor, it was much easier to invest because I had the resources of, access to great products, really cheap cost, great brokers and investment banks providing me with a lot of good research and services. So it was easier. And so the GICs of this world, the people who work there, get a better deal. As an individual investor, you struggle. It's very difficult to get good information even, let alone good advice. And then getting access to great products and at the cost that you want to get it in order to achieve the success is difficult. So the pain point Endowus is trying to solve is really the everyday problem of investing. So it's intimidating for a lot of people, especially people who've never invested before, or who don't have a finance degree, or who's not married to somebody with a finance degree. And the difficulty of investing, meaning that it's actually difficult to execute, even if you have ideas. You don't know where to go, what are the products available to us. And then the third thing, which is actually really, really important, and we call it hidden costs of investing because it's hidden. We don't know. It's not really blatantly obvious to us when we start investing that there's so much cost that's out there in accessing these kind of stuff. So basically, Endowus is set up because each and every one of us had trouble investing. And Singaporeans in general have a major financial issue ahead of them because in 2019, last year, OCBC did a financial wellness survey, first of its kind. And we can see some of the results here of people who answered that, almost 75% said that they're not on track with a retirement plan. 60-70% said they're behind in accumulating enough to maintain lifestyle post a retirement. And almost 40% said they don't know the best way to grow their money. And if you look at the actual, breakdown of that investing pool of people who actually, asked, what are you doing investing? 1/3 actually said they're actually speculating excessively for quick gain. And if you were trying to do that, I think recently it would have been a very painful period for you. And then other people, 37% said investment not performing to their target. So they had high expectations, but their expectations are not being met in the way they're investing, or because of the high cost, or because you don't know how to invest. And then the other 1/3 or 35% said, I don't even invest. So either you've tried and you've given up because it's been painful, or you don't know how to, so you're still figuring it out. And so every piece of this audience, I think, is relevant to Endowus because we want to help you succeed. We want to provide advice that is suitable and personalized for you, and we want to execute it in a manner that will improve the chances of your success. And one of the most important things we can do is not to try to beat the market by outperforming 2-3%, but lower cost. If you can lower cost by the same margin, it is effectively doing the same thing. And we think that's a really important aspect. So who are we? We are a bunch of great guys, obviously we'll say that, but really experienced in finance. So every single one of us come from, especially the business side, come from financial background. I myself, institutional investing, I manage tens of billions of dollars investing across Asia and emerging markets, mostly in public markets, asset allocation and macro as well. Greg, my partner and CEO, is UBS Investment Bank, fund structuring, private equity, and VC stuff as well. And also he started the Grab's payment business when it was Grab Taxi and cash only. Yuning is Blackstone private equity, Goldman Sachs private banking. He ran a large family office just down the road here of over $1 billion. So he has a wealth of experience in investing. Sinting is our client head, chief client officer, who used to be in private banking with Morgan Stanley and Nomura. Lin Sing used to be at Citigold. Ju used to be, who's our CTO, used to be at Goldman Sachs Asset Management and Alpha 9 Asset Management. And Jay, who's our backend lead, was Kakao Bank. John was, Stashaway and Goldman Sachs. JX used to be in Silicon Valley. And so the whole team is really experienced in finance, really deep domain knowledge. And, for a fintech company, I think it's really important to be deep tech, but it's also really important to be deep fin. So it's a financial service that we're providing. And people forget that actually financial service is a regulated industry. And you have to be licensed as a representative to provide advice to people on financial matters. That's how important and grave it is. It's akin to the legal profession or the medical profession. And some people might laugh and say that's a stretch. But those are two other professions where you see a lot of, you see that it's actually heavily regulated. You actually have to be licensed to provide advice as a doctor or as a lawyer, for example. And, those are the industries where the word malpractice is used quite a lot, right? Because there are people who don't do it right. And I think in financial services, it's the same thing. There's malpractice that's going on. And it's really important that, for fintech companies and incumbent financial institutions as well, really focus on the most important part, which is doing our fiduciary duty. The doctors have their, oath, and we have our fiduciary duty, and we should be providing the right advice in the right way. So we are set up as an independent financial advisor. So we are fee only, and we only take a flat fee from our clients for providing our advice and our service, but we don't get paid by anybody else. And this is really, really critically important, as I'll explain later. And the team has brought together Endowus to, fit this gap that exists in the market. So there are people who are giving you advice, like offline financial advisors, but they're expensive. And there's no digital platform through which you can easily attain the experience. There are guys who give you digital experience on investment platforms, but they may not necessarily be also low cost, or they're not really focused on the advice piece. And then discount brokerage guys have low cost options, but very limited digital experience, and they don't provide any advice. So Endowus is supposed to fill that gap in the middle where, we really want to provide, a digital experience that is seamless, provide advice that is meaningful, and do it at a cost that is going to make a tremendous difference to the outcome. And this differentiates from the traditional players who are high cost, low tech, and low quality advice. And these are the retail banks and brokers and insurance financial agents. One thing that I do want to highlight here, because we've had one closure in the robo-advisory space, and we get a lot of questions asked about us on how safe is Endowus, what happens if Endowus disappears. So I'm just going to put it front and center here. We have really thought this through as financial fiduciaries, as guys who've been in the industry a long time, to see how we can safeguard our investors' money in the most secure and robust way. So we are set up as a financial advisor. If you're set up as a fund manager or a broker, you can actually handle client money. We actually don't handle the client money. We actually don't get to touch it at all. We actually just provide advice to you, but the money flow doesn't come to us. It actually goes to our broker partner, who is UOB Kay Hian. So UOB Kay Hian is the largest domestic broker in Singapore. And that's really important to us as a partner because, we are very focused on Singapore market. We're very focused on providing local services. And UOB Kay Hian is the biggest and one of the oldest and the most well-capitalized, secure partner that we can find in Singapore. And it has the full backing of UOB Bank and the group behind it. So it's an institution that can be trusted. And also the other factor is that UOB Kay Hian now has become a CPF investment administrator. So they were just included as a CPF investment administrator last year, and we worked really hard to achieve that. And so UOB Kay Hian and Endowus is partnered together for the CPF service, and they're the securest pair of hands. They're the investors' custodians. We will create a trust brokerage account at UOB Kay Hian in your own name, so your assets are not commingled with us. We don't touch it. And we don't even, get to, access it in any way. And if we disappear, your money is still in your own name and a UOB Kay Hian account. So you have full access to it. We have a standing agreement with UOB Kay Hian that they will honor the agreement that you will be able to continue to invest with them in the same way until the moment that you want to pull out your money, and you can pull it out at any time back to your own bank account. So this is the safest way that we could find in protecting your assets. Now, if I delve into each of these buckets in a little bit more detail, and we try to not be so technical today, a bit more fun and interesting and easier to understand, because we often get feedback, and Sheng-Shi is the biggest advocate as a personal finance lead, that we are a little bit too technical, a little bit sophisticated, and it's just not who we are. We are sophisticated in the way we implement it, but we can be very down to earth and friendly and simple and easy as partners and service providers. So investing delivered to you, that's who we are. We believe that this day and age, you should not be going to a place, a physical location where you have to take a queue, line up for an hour, and then be served. And the teller doesn't know what investment products are available, how we invest, whether we should go to a physical financial advisor, sit with them for hours on end, and ask really private personal questions about all our personal details, and then spill everything and then find out they're really expensive. So these kind of experiences, or private banks, I'm not going to even mention private banks, but many people have experienced private banks, I suppose. It's not a great experience there either for what you pay. So I think this day and age, we really want to focus on Endowus trying to solve the problem and meet the needs where it's highest. So we don't try to sell you anything because a lot of insurance agents, sell you investment-linked products, and I just want to put it out there that in general, you just do not want to mix insurance and investments. Those are two completely different things. You should have your term life, your health insurance, your disability or critical illness coverages, get well covered through insurance. That's like the outlier events in your life that insurance should cover for you. Investment is about doing it sophisticated in a good way, robust way, so that you reach success in your investment. These are completely different things. When you mix it, you get the worst of both worlds. You get poor investment returns and you don't get enough coverage. So Singapore is one of the most insurance heavy countries in the world, I think. And so many insurance products are sold, single premium, investment linked products as well. But unfortunately, Singaporeans are not completely well covered. So it's an irony that you're buying so many insurance products, but you're not covering yourself really well or efficiently in a cost-effective manner. So please do not mix insurance and investment. That is the worst thing you can do. It leads to poor outcomes, and it doesn't even give you good coverage in insurance. So we want to give you the comfort and the ease of onboarding and getting started in investing so that 90% plus of the Singaporean population can get access to great investments at the lowest cost possible and invest not only their cash savings but also their CPF in a very effective way, globally diversified, but also your supplementary retirement scheme. And if you don't know, supplementary retirement schemes is an amazingly great scheme. Sheng-Shi has written many times about it. Please check out our Endowus Insights page and a lot of great content there. But especially on SRS, just because, you know, it's a seasonal thing. At the end of the year, we all rush to open up our SRS account or put some more money into it. But you should plan this out throughout the year, regular savings, so that your supplementary retirement scheme, which is a limit of 15,300 for Singaporeans and PRs, but for foreigners is $35,700 that you can save tax-free for 10 years, and then you can actually take that out from 62 right now, and then, you know, get income in your retirement, steady income over time, and be much more tax efficient as well. So these are things that we provide. We can do it all online. Some of our clients refuse to meet us. We reach out and ask for coffee or say we want feedback, and, you know, why don't you come to our office? They say no, we don't need to. But there's other people who love to come to our office, sometimes uninvited, you know, without an appointment, and we love that. And we welcome you to come to our office and visit us, sit down with us, talk to us about our services, product. We have 6 licensed representatives, going to 7 or 8. And we have enough people out there. Some people call this like bionic advisors. I think it's too out there. It's like too grandiose for us. It's just about, you know, maintaining a human personal touch, because we are human, and we appreciate that. But we're okay with clients who want to have a fully digital experience. And so, you know, we're made for that too. So we are the best of both worlds. Now, the problem with advice, as it stands, and this is, you know, a problem with the incumbent financial institutions. For a long time, it's just been too easy for these financial institutions to provide poor advice and get away with it, charge exorbitant costs, you know, upfront sales charges, hidden trailer fees, redemption fees, you know, brokerage fees, transaction fees, you know, custodian fees, platform fees. There's so many fees, and even the word trailer fee has so many different names. It could be called commissions or kickbacks, trailer fees, retrocession fees. There's so many words for the same thing. And basically, it's a problem because it incentivizes people to sell product that gives them the highest trailer fees, and that's wrong. It also incentivizes people to churn clients. So this year, it's the emerging market fund. We should buy the emerging markets, they're back. Oh, China's, you know, the COVID is over, so we should buy China first, so let's buy the China fund. Oh, US is going to recover, or Europe's going to recover, so we'll buy the European fund or the, you know, US fund. So we keep churning, and the reason they do that is because they get the sales commission every time you buy a new fund, and it's all up front, and it's taken away from your returns. And so they're stealing from your returns. And that's why we're very upset, and we really believe that it really incentivizes people in the wrong way. And that's why we take no sales charges, and we refuse to take trailer fees, and we build portfolios to give you the access to the best products. And it's unfortunate that the reality is, if we look at the outcome of investors and how they do over the long run, there's a behavioral aspect to it as well. So we are our worst enemies, because we chase markets on the way up, we sell at the bottom, we can't handle the pressure of investing up and down through cycles, and we take profit too early in an upcycle sometimes. We try to time markets all the time. We hold too much cash sometimes, or we don't hold enough cash. So we make behavioral mistakes that are driven by our emotions of greed and fear, rather than logic and, you know, proven theories of finance. And so that's a real problem. And so the outcomes have been really poor, and it's been worse than just purely passively investing. Now, we're really focused on retirement. Retirement is such a critically important thing. It is the single biggest generational challenge of our times. And it's something that is important as an individual. It's important to support your family, especially if you're a sandwich generation. You have to support your parents and your kids, and you're stuck in the middle. We really need to, you know, prepare well for our retirement for the sake of our loved ones. And also as a society, the whole of society is groaning because we are not well prepared for the future. the retirement pension problem and the shortfall is a global problem. It's a societal problem, and we need to do everything we can. And the younger you are, you should start early in saving and investing for the future. Now, for the CPF piece, it's one of the most critically important piece in Singapore, and it's part of our retirement plan. But unfortunately, CPF is a total social security plan. It's not just for retirement, right? So basically, our basic retirement or full retirement or enhanced retirement CPF balance is only able to give us maybe $1,500, $2,000. Maybe it'll increase if we contribute more and the enhanced rate goes up. But that's the kind of idea of what we can expect from CPF Life. And we feel that that's just not enough. And we have to supplement that with other sources of retirement income. And the CPF OA is a piece that we can use really effectively to prepare for retirement because we have the investment scheme. Unfortunately, until now, the investment scheme has been a poor experience, either because you've been pushed to insurance-linked products or cost has been exorbitantly high. I thought I had the cost chart. Sorry, it's here, way back here, sorry. So the cost for investing your investment scheme is exorbitantly high and very similar to your retail experiences at banks. So the total fees in your first year is about 3.5%. It goes down to maybe 2% after the first year. But if you churn again and buy a new fund, then obviously that goes back up again. And we've been working really hard to try to solve this problem by working with the CPF board, with Ministry of Manpower, with MAS, and with our partners UOB Kay Hian, and also our fund management company partners to get to a cost that gives you a chance of success. So your CPF OA is an amazing pool of asset. Most people still use it for housing, and that's okay. I don't think there's anything wrong with it. But really, I think for the long term, you shouldn't buy your second and third home with your OA. Even your first home is debatable, with a 99-year lease, HDB, with property prices where it is, and the fact that it's a low-yielding asset class, how much you allocate of your OA versus your cash, and whether also you save up through your OA and use it for down payment, I think is okay. But using your CPF OA for mortgage payments is also something that you need to weigh. Everybody's circumstances are different, and I completely understand that. And if OA is the best pool of assets to use for your housing, I think that's fantastic. I think Singapore government and CPF board gave you a wonderful way to be forced saved 37% of your income and then invest in a home for you and your loved ones. That's great. But if you're preparing for retirement, and especially once you have a home and your CPF OA is building up, this is the pool of money that is perfectly suited to invest for the long term. Because rather than the 2.5% CPF interest rate, if you can just get the market average returns, and short term, the markets are very volatile as it is right now, but you're investing every month with your CPF OA and investing dollar cost averaging, regular savings plan. You can't access it. It's stuck in there for 20, 30, 40 years. So basically, you are perfectly suited to invest for the long term. And as you invest for long term, the volatility narrows down to the average return. And so if you can invest 20, 30 years, then your average market return, will get to that 6, 7%. And it's much better than the 2.5. And the power of compounding means that the success rate of investing in markets, beating the 2.5%, doing better than that, and helping you get to a much secure position in your retirement is definitely higher. And we have solved the most important problem. I showed you the picture of the line at the bank. That's what you had to do initially to get your CPF account open so that you can invest. But we've worked really hard. Our tech team has done a fantastic job. Our product team and our business team have worked together to really give you a really seamless digital experience of like less than 10 minutes without having to visit a physical branch. If you have an existing CPF investment account with DBS, OCBC, or UOB, then it's really easy. You just need to input your account number. That's it. My info is integrated, so when you onboard with us, you can actually see your CPF balance, how much you have in OA, how much you have in SA, how much you have in RA, MA. So it gives you information So my info is integrated seamlessly. If you do not have an IA, then you have to go through a CKA assessment, not us. It's something that is required by the MAS for CPF investment. And then you have to go through that process, additional step. But other than that, even including that, you could probably open everything up in 10 minutes and start investing. And the easiest, the best thing about it is that it actually is, we pull the money from CPF through your investment account, whereas cash, you transfer the money in. So I think that experience is something that is very seamless and great. And so Endowus is all about improving financial literacy and education. I think it's such a critically important part. I mentioned Endowus Insights. Please go to the website and subscribe to it. I wrote a very personal account of, going through the financial crisis in 2009 and giving perspective to some of the things that we're going through right now, comparing to 2008, but also 1974. Which is, I think, has a lot more similarities in terms of the external shock that we're facing and the extent of the economic response. And so 1974, Endowus Insights is a great tool for you to improve your financial literacy, and it's something that we've been committed to. We do a lot of other educational programs. We contribute articles to press and also financial blogs. We work with them in partnership. And I think that's really important to raise the level of financial literacy, and also as a result improve consumer advocacy, because on the demand side we need the consumers to rise up and tell the financial institutions, look, you guys need to provide a better service, and also then look for alternatives on the supply side, find companies that are providing you great service, good advice at low cost. And it's not just Endowus. There's several independent financial advisors and other platforms that exist out there that allows you to invest. But Endowus is the first and only digital advisor for CPF investing. So we are the first guys, and the only way you can invest in passive funds in your CPF. It's the only way to build globally diversified, low-cost portfolios, all online and seamlessly executed. And it's the only platform where you can actually manage all of it. So the digital wealth platform that we built allows you to manage your CPF piece, your SRS piece, and your cash piece as well, so that it's a holistically managed portfolio. So all those things are things that we are working really hard to improve. At this point, I'm going to bring Shengxi back. And for those of you who are interested, please use this QR code scan. But also, Shengxi is going to demo for us what the onboarding process is. For those who are existing clients, go grab a coffee or a drink or have a toilet break. We'll be maybe 2 minutes.
Yeah, sure. So so let me just run you through the process. When you sign up, okay, so when you create an account, this is what happens next. Let me just refresh this. Okay, so let's just say you are Andy Lau. Just key in your email address and password, create an account.
Subscribe to Weekly Insights.
Yep.
So you have a choice here, right?
Yeah, so it's really convenient. You can sign up with my info, and we'll be able to pull out any information that is available from the government agency.
Including your CPF, so it's an optional. That's really good.
Yep. So let me just see the test account.
There you go.
Okay, so you have to agree with that. So we are pulling the information from the government agency so that you fill in no paper forms at all, right? So this is the information that we are pulling through my info. Our tech team has worked very hard to integrate all the information, right? So you can see my name, Andy Lau, all my personal details, how much CPF balance I have.
Wow.
So
this is the part that we worked for over a year to bring in, to fully integrate. So now you can actually see all your CPF balances seamlessly.
Yeah.
It's great.
So, okay, use the information for my onboarding, right? Let's say we just use cash for investing. right? Your personal details
You missed out the nice welcome letter from me.
it's okay. They have their time to look at it. So let's just say you are gonna start investing with us for $10,000, right?
Oh, you put $1 million.
Oh, I think the interface lagged a bit. So
Okay.
10,000 general wealth accumulation.
You choose. Yep.
So you have to choose. So from top to bottom, it's your risk appetite, right? So grow my capital by taking some risk.
And you can adjust that, slide it a little bit if you want to play around with it, and then some more information about what that means. So this is important because I think a lot of platforms, they ask for a lot of information, they ask a lot of questions, but then in the end, it's a very simple result. It's the same result. And we played around with different questionnaires, and we just said, look, when we're thinking about risk, most people are just worried about losing money, and that's the biggest risk. So, we use the worst 12 months percentage loss from the global financial crisis of 2008 and said, look, what would be the maximum drawdown? Would you be okay? Because that's important, because you need to be able to stick through it, that you stick to your plan regardless of what the market is doing, because long term, that passive asset allocation, and we always say asset allocation makes up 80% of total returns, not the individual stock selection or fund selection. So I think that asset allocation is really important, and you should be able to stick with it through thick and thin.
Yeah, so let's move on. So, yeah, Jack Bogle. Yep. Quote. Okay, so I ended up with a 40-60 portfolio, right? You can opt in for automatic rebalancing. So all of this is at no additional cost. It's part of our 0.4% or 0.6% fee.
So, and guys, I think it's really important to highlight that up to all of this thing, it's all completely free. There's no commitment to invest. You can always decide not to do it. The money doesn't suddenly get pulled out and invested at any time. Even for your CPF, you need to do the OTP and finally agree. And if the OTP is done, then that's when the trade actually occurs. But up to that point, all this like plans, looking at the portfolios. So this is
monthly investment amount.
You can play around with the different monthly investment to see how that affects your long-term returns. And then you can go down to more stuff, right?
Yep.
So fees, very transparently, explaining all the fee breakdown.
And the funds that we
underlying
invest
funds. You can click on can you click and see?
So so I think maybe let me just run through this. So you can just change the monthly investment because you're not comfortable, right? So just do change it. Then the interface will run our simulation. Then you'll be able to find out how your investment outcome will be like. So that's just that. And you can go further and see the historical returns. So these are based on the funds that are existing already, not back-tested results, right? So you get a feel of how the funds have performed because we are not a product company. We are an advisory company.
Yeah.
So, okay, let's just move on. Yeah, then pretty much done, right? So you have to fill in your personal detail.
So as opposed to your legal name.
Yeah, so the rest of it is actually filled up, right? Yeah, let me just... Oh, this simulation is pretty good. Yeah, okay. Please fill in your real details when you are filling it up, okay, all right? Okay, so marital status, this is also pre-filled for you. Number of children. Employed.
Just choose.
Yep, actor. Andy
You're
Lau.
acting right now.
Yeah, I'm acting right
Andy
now. Endowus. It's great if you can get Andy Lau to work for us. Free marketing. Okay, yeah, he's working at 146 Neil Road. Do
Great.
visit us.
To see Andy.
Yeah, to see Andy.
Okay. Well, actually, Greg and Andy look a bit similar.
I would say Greg look better. Okay.
Better looking guy. Greg's a better looking guy.
Yeah, so yeah, do fill in details. This is part of the AML process, anti-money laundering process.
And KYC.
KYC process, yeah. So, yeah, do look through this carefully, okay? So, investment products, it's really more for us to understand what kind of products you have previously invested in.
because we'll be coming out with new services and better products as well
Mm-hmm.
to continue to improve our service.
Yeah. So next part.
Just click anything.
Yeah. No, probably not. I don't really not so comfortable.
Okay.
Okay. Let's just move on for this.
It would be great if you can fill those information out. It gives us more information to work with, but it's not absolutely necessary if you're in a hurry.
Yeah. So all of this, you know, if you cannot find your CPF IA account number, you cannot find your SRS account number, just fill you can fill it up later. So we also take up accredited investor. So Sam may go through some of our high net worth offerings later on. Yep. So yeah, do fill up the CKA part as well.
Is that you? 2008 graduation?
No.
You're a bit older than that.
No, I'm actually graduated last year. Yeah. So
That's not true, guys, by the way, just in case you're wondering.
yeah, just okay. Please read through this if it's if it's important to you. So this is just for demo purposes, right? Yeah. So no financial history. Nope. PP, no, I'm not that important. Andy Lau is not that important. Marketing, up to you, right? So
Okay, so continue. Beauty, okay, great.
Beauty again. Okay. So
There you
this, there you go. And I think the main point here is that there's a lot of process in place where, you know, if you are not so comfortable, you can not create that investment, right?
Mm-hmm.
So it's really for us to get the brokerage account set up so that in the case that you are comfortable with investing, you can start investing.
So there's two things. One is that up to this process, you get to see a lot of things. So you get to experience Endowus onboarding. As you can see, all of this takes less than 10 minutes, obviously. And if you're really fast, then you can do it in like 5 or 6 minutes. Also, up to this point, there's no commitment whatsoever. Completely free advice, just, you know, looking at how we built the stuff, what is the funds underlying. We wrote our fund rationales for why we chose this fund. You know, we explain very briefly what this fund is, a fund rationale that goes to the FAQ in our website that explains in very small letters, but in great detail, historical track record, why we put it in. And then there's a bunch of FAQs there if you want to go into it in more detail. And then the fee levels as well, transparently, and explaining exactly what each component is, and how at 1.1% all in, with no additional charges, no trailer fees, no sales charges, but also no additional costs. There's no brokerage fees, there's no transaction fees, there's no custody fees, there's no other additional fees that are hidden. It's all transparently done here and flat fee based on your assets. We also charge it every quarter instead of daily or, you know, monthly or weekly, so that the cost doesn't compound. So it's a quarterly cost. We charge it one time, and that compares to the industry average cost of about 2.5%, which is, you know, less than half, right?
Yep. Okay, so let's send a verification code.
Yeah.
Let me just take a look. Okay, so this, do wait for your verification code. And you're done.
That's it. So
That's
there's
it.
Sin Ting, head of client experience, our chief client officer. Nice smile, and she's always here for you. She's the person behind support at Endowus.com, as is Lin Sing and Sheng Shi and all of us, and our reps, human reps. So we're behind it, and we're here to serve you and answer any questions that you may have during the onboarding process.
Okay, so let's get back to the presentation.
Right. Sounds good.
Yeah.
And this is the QR code for what? Is that what is it? What does it do?
No, it gives you $20 off your access fee.
Okay, got it.
Once you sign up. Yeah.
Okay.
So do sign up through the link so that you get $20
Is there a
off.
time limit?
Time limit? Yes, there is a time limit.
Okay.
So we'll close it off by end of the week.
End of the week. Okay.
End of the week.
We only have a few days, guys, to sign up if you're not already signed up.
Yeah. So if your New Year resolution is to start investing, I think you can do consider trying us out.
Okay,
Yep.
sounds good. Thank you, Shengxi.
Thank you.
All right. So we'll continue the presentation. The second point about the difficulty of investing. So I explained to you how we have improved the investing experience through our tech platform. And the difficulty of investing, do we want to know what we want to buy? So there's so many different choices out there. We really don't know what to invest in. And then we also don't know the hidden costs, as we explained, which we'll talk about. So we build products on top of other people, other fund managers who are the experts in building product. So we focus on the most important thing, which is advice, which is to help you choose these products, but also build portfolios, how to rebalance efficiently, how to invest for the long term, how to plan for retirement, and for different goals that you have. So we work with like the largest fund managers in the world, and typically retail access is limited or is really expensive. But we've solved this by getting access to institutional funds, so things that are normally reserved for the GICs of this world, and the CICs. We actually get exclusive access to the institutional share class of funds. And we give a good example by later on, we'll give you an example of what the differentiation cost is. We build portfolios that is strategically asset allocated. So we don't try to time markets on the way up or on the way down. We really try to be passive, because long term, that's the best answer to investing. It has the highest chance of success, because trying to time markets is very futile. Sometimes we get it right. Yes, right now, some people, sold early or they shorted the market. So they're sitting pretty. They bought some gold or something that was more defensive. And so they think that they're doing really well. But it's been proven that even professional investors, and I've been investing for a long time, I've seen many people who have done well for a while collapse completely in the next cycle. So it's about the consistency of returns, and it's very difficult to generate the consistent returns. So we give broad market exposure. So we try to expose you to the whole market, because every year something else is going to outperform. We have systematic exposure to factors, what are called the proven factors of return, that gives you an edge in terms of returns, which is high profitability, value-based, and small-sized companies. And in fixed income, trying to take advantage of the factors of term, credit, and diversification, and duration to give us better outcomes. And it's really key to really invest broadly, globally. I would like to challenge, somebody to find Singapore in there. It's actually very difficult to find. Singapore is less than 1% of the global market, and smaller than most, major economies in this region, let alone around the world. And so Singapore is great. I think, I love Singapore. I think some great companies are here. But if you are putting all your eggs in one basket in Singapore through the STI or through single stocks, it really is risky. Whether it's, good companies, or whether it's like REITs, for example, which really took a beating recently because of the short-term demand-supply mismatch. I think it's very risky to put all your eggs in one basket. You should be globally diversified, because in the end, the market will choose the winners for you, because the best ones win out over the long term. And we have in our cash product the single most diversified fund in the world. It has 11,000 stocks, and that compares to MSCI All Country World Index, which is the broadest index, and that has like 3,000, I think 4,000 companies in there. So this is like multiple times as broadly diversified. And when people talk about passive investing, this is truly passive investing, because you're exposing yourself to every company in the world. It's tilted towards the proven factors of returns like value and quality and small. But having said that, it owns like some of the major companies that we're very familiar with. The top holdings are familiar names. So it gives you broad exposure to the successful companies as well. And it's important that we highlight it's a Singapore dollar share class. We want to be efficient in terms of tax, and efficient also in terms of the currency. So you don't have to take needless FX risk or take on additional cost. And tax is really important, that at the portfolio level, at the fund level, at the investor level, there's different taxes that play at your returns. And just very briefly, US listed ETFs and funds are going to be charged a withholding tax of 30% on all income and dividends, regardless of the source of country, at the fund level. So that's different from Irish UCITS, which actually has zero taxes on the fund level withholding tax. The underlying portfolio level taxes is another issue. And then at the investor level, obviously, we're in Singapore. We're blessed to be in Singapore where there's no capital gains tax. So I think it's important to look at it in detail, and we solve for that for you so you don't have to worry about it. And then, for example, in CPF, we thought really hard because we wanted to create a globally diversified low-cost portfolio. But unfortunately, CPF didn't have any low-cost passive equity portfolios. So we went to Vanguard, our friends at Vanguard, and who happened to just pull out of Singapore and are not locally based here. We also brought in local partner Lion Global to wrap a product at the lowest cost possible. Now, the difference between buying the same fund, which is S&P 500, for example, passive managed by Vanguard, in the retail market through a bank, you would have to pay a 57.5 management fee. You would have to, give up trailer fee, which is half of that. And then the other cost of total expense ratio, I would like to highlight that management fees and total expense ratios are different. Management fee is what the fund manager or the ETF manager takes, but there's an additional cost involved in managing that fund, and that's sometimes charged on top. So what's important is the total expense ratio. And we transparently use the total expense ratio and not the annual management fee. And then on top of that, the retail banks, especially some of the other platforms don't, will also charge a sales charge of 100 basis points. So the total cost is about 167.5 basis points. Even if you go through a very low cost efficient platform, you will still be paying almost 70 to 80 basis points. And that compares to our access of just 40 basis points all in. So we are the first to put in these passive funds into CPF. We put in the S&P 500 index fund for Vanguard. We've just included the second one, which is the global equities. We will be including that into our portfolios very, very soon. And as a result, we bring down costs and give you better products to access. And the final thing I have to say is that as a result of our unique feature of 100% rebate, we're the only ones who will be able to give you access to these products. And finally, the hidden cost issue. I'll just go through one fund, which is the PIMCO Emerging Market Bond Fund. This is a fund that we brought into Singapore. It's Sing Dollar Hedge. It wasn't available before. Before, they only had the retail share class, which is the E-class. We brought in the institutional share class. And you can see the difference in the total fee. At the fund level, it's a 90 basis points or 0.9% difference. Even if you add in all the most expensive platform fees that you pay at Endowus, it's still a fraction, almost a 47% difference and 55 basis points difference in fees. So it's about solving problems in a very sophisticated manner. And, sorry, it's frozen. Okay. And FX is another piece that we really, emphasize at the fund level, but also at the account level. We get really good rates from UOB Kay Hian. We don't take a spread. We don't take any cost. Other brokerages, other guys will make money on the FX. Even platforms and even robo advisors will take a spread. We take no FX spread. We believe that we should provide it at the lowest cost possible. And the final thing is CPF, investment scheme costs, which I explained here. The wrap fee, which is what we charge at 40 basis points, is currently at 70 basis points. Unfortunately, that was supposed to come down to where we are, but it's been delayed for another year. Hopefully that happens for the sake of all CPF members. But we moved first, even before they announced this. So we are the lowest cost way to access CPF. And this is a simple analysis of us compared to other platforms using US ETF, a robo-advisor, or a local bank robo-advisor. I think, if you look at it on the surface here, then the fees are not that different. At the low end, we are lower, clearly, but not meaningfully different. But the problem is there's a lot of costs that you don't know about. And this is a table that I think is really important. I mentioned the FX costs that we don't charge. Most of the other guys, whether it's banks or robo-advisors, all charge you FX and take a spread. And then, for example, the robo-advisor takes a spread, Saxo or HSBC takes a spread, the bank takes a spread. And also the withholding tax. So the dividend withholding cost is the US tax, because if you use US ETFs, then you're beholden to a withholding tax. If the dividend is 2%, then 30% of that is 60 basis points. That's a meaningful difference. And the final piece is that ETFs are market traded, and therefore there's a bid-ask spread. And that could be anything between 5-10 basis points. The illiquid ones in Singapore, and that's why Singapore listed ETFs are very poor, is because the bid-ask spread is very, very wide and can be as wide as like 50 basis points or 100 basis points. So very wide spreads in SGX, and also all the ones that are globally natured in Singapore SGX listed ETFs are all US dollar based. So there's an additional cost again of converting your FX, and then also transacting through a brokerage fee, which is also not included here. So if you put in all the cost of investing through these platforms, then it's almost double what it is. So I'll skip a lot of these things, but just to highlight that the bottom here, the blue label, because if you look at the difference in fees, for example, in CPF, from what you get through us building a portfolio, and then the industry average, how that compares over the long term, over a 30-year period, that's a 200% difference in the outcome just from paying more fees. And that compounds over time to a meaningful difference. And the single most important factor in investing is really to bring costs down. That's why Warren Buffett says for the most investors, individual investors and personal investors, you should just buy a low-cost index ETF. Unfortunately, Singapore doesn't have one, and many people access it through the US, and it's very difficult to do it if you're not very knowledgeable, or if you go through a robo-advisor platform, then it's really, really expensive because you're paying 2 levels of fees and you're paying FX and taxes as well. So simple summary, who is Endowus? We provide access to best-in-class products. We are the lowest cost. We're globally diversified. We provide local Singapore solutions. So you should match your assets that you have to invest with the future liabilities which you have also in Sing dollars. And currency fluctuates, but if you lock it in Sing dollars, then you will be fine. God forbid in the future Sing dollar strengthens a lot and the US dollar weakens and you have all your investments in US dollars, then your Singapore dollar performance will really drag. Right now it's great. A lot of these robo guys or US ETFs are doing better because purely on the currency. Because you're exposed to the currency. But if this reverses at any time, and over the really long term, Singapore dollar has appreciated against the dollar or any other currency because of the safe nature of the central bank, I think that if Singapore dollar appreciates over time, then you will lose out in terms of performance, and you will also have fees that you'll have to pay when you bring it back and convert it back into Singapore dollars. So with that, I'll just end it here. So going back to the original question, why shouldn't investing be as easy as getting into a taxi through an app? It shouldn't be. It should be easy. But the problem is that because it's a regulated industry, it's a licensed industry, and there's deep structural issues with investing through existing financial intermediaries, it is difficult. Endowus is doing everything we can and doing our part to improve that experience for you through technology and application of technology across cash investing and SRS, and most importantly, your CPF, because that is what's going to matter in securing your financial future. So thank you for listening. I'm going to bring Sheng-Shi back, and we'll take maybe a few questions from the Seedly forum.
Okay. Yep. Thank you, guys. So thank you for listening in. Let's get on the Seedly forum. Okay, so I'm going to look at the unanswered questions. So let me just refresh the page. We have a few more questions coming in.
Slow internet today. Okay.
Yep.
Okay, maybe we can answer. Oh,
just no.
Okay. Oh.
Okay. Why not you take a pick? The first one, all the way at the top.
Okay.
Do you have products for high net worth individuals? And do you have different portfolio types for those investors?
Yeah, so basically we serve the whole range of client base. We are a direct-to-consumer retail product, and we try to make it simple for you, as I explained. and give you an advised portfolio. So it's an off-the-rack solution. So that's why it's low cost. That's why it's scalable. But for high net worth individuals, if you have different needs and you are investing a meaningful size, if you're especially an accredited investor, then you have some differences in the products that are available to you. If you are a high net worth individual, then please reach out to us, Sin Ting, Lin Sing, Sheng Shi, any one of us. You can pop us an email, and we provide you with the bespoke solutions or multi-currency solutions or other products. We have access to pretty much everything that a private bank has, and we will have it at a lower cost than private banks, and we'll provide you with sophisticated advice along the way.
Yeah.
Okay.
So yeah, Sam, maybe just add on. I got a question on
Sure.
Instagram actually.
Okay.
So someone asked about the FX spread just now.
Yeah.
Like, don't we just offer Sing dollar denominated funds?
Yeah.
So actually, we, like what Sam said, we do offer other foreign currency accounts as well, right? So you can fund your Endowus account for euros, US dollar. So those are available for the high net worth customers.
That's
so,
right.
Yeah, that he's referring more for the high net worth rather than the.
So the FX piece has two pieces. One is that if you go through other platforms which use US ETFs, then they have additional costs that are not maybe transparently shown, or a lot of clients miss the details, the small print, so they don't fully understand the additional costs that are involved in investing in US ETFs from Singapore. Unfortunately, that's just the reality. And then the other FX piece is, if you happen to invest through us and you want a multi-currency account and you want to convert USD into Sing dollars to invest in Sing dollars, or you want to invest in US dollars and sending us Sing dollars, we can give you the most competitive FX rate for your investments as well. So those two different parts, but in both cases, I think we're very, very highly competitive. But the most important thing for us is to match your asset and liability, invest in Sing dollars so that you can spend in Sing dollars in the future without taking FX risk and the additional cost burden.
Okay, sure. Let me take the next question,
Sure.
or you take a break.
Yeah, sure.
So would it be similar if I invested in a UCITS ETF that tracks the world index, VWRL? How is that different from Endowus? So I think VWRL is, I'm fairly familiar with investing in Irish domiciled ETFs. So VWRL, for those that of you who don't really track the passive investing, the Boggerhead investing methods, so it's one of the Irish domiciled funds that are tax efficient. I think Sam talked about it just now. So is it similar? I would say it might be more cost efficient. It really depends on the brokerage that you choose to use and how long you stay invested. So the FX costs on the different brokerage platforms can be very different. If you were to use a local brokerage, it will be a lot more expensive. Transaction costs will be more expensive. But of course, if you were to use a discount brokerage, US discount brokerage, it can be very competitive FX costs as well as a very competitive transaction costs as well. And of course, as what Sam has mentioned, there is also a bid-ask spread to ETFs. So all of these are part of the cost. And if you were to be able to transact on a low-cost platform, that would be great. And you might be able to be more cost-efficient. But in terms of returns, diversification, Endowus is offering something that's different.
Also, it doesn't resolve the FX piece of the problem, again, because VWRL and almost all UCITS funds, whether it's Vanguard or BlackRock, are denominated in USD, or it's denominated in euros or GBP because it's in Europe. That's where the demand is. They're not going to have Sing dollar, UCITS ETFs in London, right? So what we did with the CPF Vanguard product is get Lion Global to wrap it and convert it into a Sing dollar. So if a robo-advisor tries to do the brokerage transaction on FX or try to hedge it, it's really, really expensive. And you're paying for most of that, right? And so I think, using Vanguard or using Lion Global or using PIMCO to hedge the currency or convert it is much more cost efficient for us. So we leave it to the product guys to solve that problem. But VWRL is, once again, a US dollar denominated UCITS ETF. So it's tax efficient, solves that problem. It's lower cost, slightly, but not really. And to be honest with you, for example, ETFs and funds, Vanguard for UCITS is the same price because underlying is the same cost. So it doesn't matter whether it's an ETF or a UCITS fund, mutual fund, they have actually the same underlying cost. S&P 500 is 10 basis points for institutional and individual. Global equities is 18 basis points, and et cetera, et cetera. So it's the same cost, not that much different. So I think the final piece of the difference within that was obviously is the world equity, which I explained. So maybe if you can rewind if you missed it, listen to that piece about how the world equity is the most diversified and the most passive versus something like a VWRL, which is MSCI All Country World Index, which I mentioned has only 4,000 companies versus the 11,000 in the world equity.
Yep. So maybe just step in for those who are only listening in after the live webinar. You can just ask your questions. So I'm very active on Zidly. The team is active on Zidly. We'll answer your questions and yeah.
For those that are watching after the recording, you mean, right?
After
so
the
this
recording,
is all over.
Yeah.
We're gone. We're at home. But you can still go on Seedly, leave questions there for us. And Shengxi is our go-to man for answering those questions. And other team members will contribute to answer your questions in the best way we can.
Yep.
Thank you.
Okay, so maybe let's take one last question, shall we?
Maybe we can answer a couple more.
Okay,
I think.
sure.
But how can we order the most followed?
Oh,
okay.
Yeah, this is fine.
Okay. Okay, which one? So there's a couple of questions about bonds. One is about PIMCO bonds versus dimensional bonds. Another one is about the zero interest rate and negative interest rates in Europe. So I'll kind of put that together and see, how can we provide positive returns for bonds. The first thing, dimensional PIMCO, we love dimensional. Everybody knows we love dimensional. We believe in their philosophy. They've done a tremendous job in bringing systematic investing and factor-based investing to the world. They're the founders, David Booth from Booth School of Chicago, and also the whole team there. We work very closely. We are strategic partners. They were there for us from the beginning. We began our services with Dimensional products. We also helped Dimensional by seeding and bringing in the Singapore dollar share class of the World Equity Fund that we talked about earlier, the 11,000 stock fund. We brought it into Singapore. It wasn't available before us. We also brought in the Pac Basin Small Company Fund, which we seeded and we brought into Singapore as a Sing dollar share class. We are working with them on the Global Quality Bond Fund, which is an amazingly good bond fund, which is very diversified across the whole term credit spread. Unfortunately, Dimensional, because of historical reasons and purely just because that's where the demand was, they launched only two fixed income products, which were the short-term fixed income and the short investment grade product. So there's two fund products from Dimensional for PIMCO. Great products. They do exactly what they say. Very high quality, AAA, AA, govies driven short-term, short duration fund, and then an investment grade fund, short term as well. But unfortunately, it doesn't, play into even Dimensional's factors of term, which is duration, and also, the geographic diversification is very much developed market focus. So emerging market is a piece that is missing there. So we are waiting for the Global Quality Bond Fund. We may put that into our portfolio. It's a great product. And we're really excited that Dimensional has brought it into Singapore. It has a very short track record, though, so we're tracking that.
Yeah, Sam, maybe let me just step in. So,
sure, go ahead.
Yeah, so I think the point to you watching is that we are managing all these different, the wide range of unit trust products that are out there. We are working with product guys to bring in better funds so that you don't have to do it.
Yeah,
so
that's right.
With Sam's experience, I
but
think that's the key takeaway.
That's right. That's key. Sorry, I'm missing the point. But I do want to wrap up by saying I've talked about the Dimensional side, now the PIMCO side. PIMCO is the largest fixed income manager in the world. And, our philosophy is that, it'd be great to have a passive fixed income solution that's low cost in Singapore. In SGD, it's not possible. There's not too many great passive products out there. There's certainly no low-cost one, and there's zero SGD ones that are globally diversified. So we have to make do with the best solutions that exist. And in Singapore, PIMCO bond funds are the best. They have tracked or beaten the index, which is our way of expressing the passive asset allocation. They have global products, they have emerging market products, they have real return products, they have income products. So they have a diverse range of products. They are locally registered and they can hedge in Sing dollars. This is really important. In fixed income, you can hedge, and that allows us to protect the capital really well. And the final thing is related to the previous question, which is about zero interest rates and negative interest rates in US and Europe, but also in Japan and other nations around the world. And this is why I think the case is becoming stronger for more active management, not only in managing risk, but also in taking opportunity of positive returns and positive yields in pockets of the world that allows us to get better returns or higher yield. And that's what fixed income is supposed to do. And the risk of losing money is less if you can manage that risk well. And also if bonds, you invest 100, you sell at 100, you take the coupon. In between, there's a lot of price movements. As long as you're a long-term owner and you don't take or realize the loss at the bottom, fixed income will still give you the long-term returns, the stable returns of 3, 4, 5%.
Yeah, so maybe just to chime in. So what happens if you were to buy, let's say, a Singapore bond ETF? And the underlying is the Singapore government bonds. So the issue is that it could be the case where Singapore government yield is very poor, as what you have seen in Germany and Japan, right? So you won't be able to get the kind of returns for the risk that you take. So I think that brings up the case for active management for bond.
Yeah. So we're not saying that active management is the answer, but I'm saying it's less sinful than it used to be. And certainly of the options that exist, a passive strategy in US dollars with high cost and bid-ask spread and a high tracking error and exposure, forced exposure to negative yield portions of the world versus a dimensional global quality product or a PIMCO product. I think that right now with what we have, the PIMCO products are the best products that we can give access to. And the problem with PIMCO bond funds were that cost was too high. Retail funds were really expensive. DBS was charging so much. I shouldn't name bank names, right?
Yeah. No.
But anyway, DBank and other banks and other channels were charging a lot, even private banks. So I think that we are accessing the institutional share class of the PIMCO bond funds, Singapore dollar hedged, and so it's efficient and it's really low cost, and something that even GIC and institutional investors would invest. These are the kind of products, PIMCO products, that these guys invest in, and we're giving access to retail investors by group buying and giving institutional exclusive access at really low cost. I think that's pretty much it.
Yep. So I think I'll answer the rest of the questions after we break off. If you have any questions, do feel free to use the Silly platform to ask us, and we will attend to it.
Thank you so much, everybody. We've run over a little bit, and apologies for the small glitch that we had that delayed our start. But we're always here for you through difficult times, and even in a rebound. We will continue to communicate with you. We hold other webinars. If you have great ideas for webinars or sessions that we should be doing, please provide feedback to us. Existing customers or new customers, you're both welcome to do that. And please continue to use, maybe we showed the QR code one final time. So this is the QR codes, once again, for the Endowus voucher offer, so that you can get $20 off or 6 months free on CPF and SRS. And also the Q&A section in Seedly, so that you just use the QR code, go there. If you leave questions there, all of us, but especially Shengxi, will be answering your questions as diligently and as fast as we can.
Yep.
All right. Thank you, guys. Have a wonderful evening.
Bye-bye.
Bye.